Good morning, everybody. Let's have a quick look at the rest of the world and the market within it. And the morning after the night where the Fed basically has decided to stay put, which is, well, I'd say probably the most obvious thing they would have done. So since then, we've had a bit of a fair old pullback now from the top to the bottom. We'll measure it from wick to wick to see what the damage is so far. That's a 9.5% move almost, really, on its way down towards this 200 simple moving average, 62,700. That's fine. Any bull div? Nothing on the RSI, a little bit on the money flow. In fact, nothing on the money flow either at all. So let's see if there's anything on the 1 hourly. No, nothing on the 1 hourly. It's been pretty steep and pretty nasty, to be honest with you. We'll have a look at stocks in a moment as well to see if they're following the same kind of vibe, which I pretty much believe that they are. Since we've lost that top of the range, the Bollinger Band has also been lost. Also, the 21 exponential has been lost, and the 50 exponential is the only thing that's holding us now. So losing this area would give us supports down here at 61,200 and maybe 59,600. Still, it would be a higher low. But it's also a lower high. So what we could go and do is go back to the original descending trend line of significance of some degree, which looks a little bit like this. It's not neat, it's not tidy, it's an example of lower highs, and it's only very small, but it does exist. So with that, we should think, all right, we've got lots of resistance above us on these higher areas. My expectations was that we were going to come a little higher to 71,500 for the top, but actually we peaked at a nice round number, more or less 70,000. So with that, we're just going to have to sit and watch and wait, which is always the main thing that we should have been doing after those death cross retests on those altcoins, which is, what we suggested was going to happen. Remember, I said we're going to get an alt rally, and the best thing you could hope for would be a retest of a 200 exponential moving average, which is actually, looking at XRP to Bitcoin. That's what it has done, which is also the expectation on XRP to its Bitcoin pair. Bang, bang, bang again. But the tether pair is the different chart, which is, like I say, surprisingly one of the better charts out there in crypto. It's still trending above all major moving averages and sitting above this horizontal, which is more or less around the 61 cent zone. So not all altcoins created equal. Golden Cross is now completed on XRP, by the way. So if we do pull back to 54 cents, it would be an opportunity for those who want to try it. But this isn't a video about XRP. We make enough videos on that. So long story short, Bitcoin has lost its major supports on the daily. The 50 exponential holds some degree of validity when it comes to support. We saw a move similar to this here. We had a bit of a dead cat bounce. Maybe that's what we'll get. We can't get bullish until we see a candle body close back above yesterday's candle body loss. So we need to get back above 66,600 really to call any kind of to say that it's not a dead cat bounce and that it's going to go back up to the top of the trend, which is towards 70,000 again. There isn't really enough evidence on any of these timeframes to say that that's what's going on. We're breaking down across the board, so we should expect continuation down, which is what I said about the Fed decision. Whether you cut, raise, or stay still, the trend is one thing, and it's the trend that's the most important thing. So with the Dixie, we've got the Dixie sitting below all moving averages on the weekly, which is, again, a bearish setup. We've got a bounce into a 20 moving average as well on the daily, which again you'd expect a rejection from that, to be honest. That's what you'd be looking for. Moving it down to the 4 hourly, a little bit more of a burst, but still looking for a rejection around here. 104.4. If you break above that, then yeah, it goes all the way up to 104.6. These are still tiny baby step moves, but it's not about the size of the move. It's more about the position versus trend moving averages and stuff like that. So it's not like saying, oh, this from here to here is great. No, it's not. Here is a resistance, here is a resistance, here is a resistance. But we get above all of those, then actually we might be looking to establish an uptrend at that point, which is only fair, to be honest with you. So it's only fair. Right, so let's have a look at the futures market, S&P futures. Sharp rejection so far. This is the futures market. S&P isn't like that quite. The S&P is still high because it's not opened yet. So we're looking to see this pull back. Now again, we've got a lot of support here on the 4 hourly. Starting from basically where we're at right now, 5,522, then down a little notch, then down a bit further. A stronger support down here at 5,487. Take it to a daily, what do we see? We see nothing more than resistance on the on the 20 moving average. So actually, but based on the daily, that is a decent drop. That is an appropriate short. To be honest with you, it doesn't look very good on the daily here. Despite what the 4-hourly says, that the daily is a stronger move. This is a nice big move back up to a major resistance. Today, I would not at all be surprised to see this all get faded with a bearish engulfing candle, which, that is just the stock market. It's nothing other than that. If we get closed above here, back above 5,560, then fine. But if we don't, then I'll be looking for this to make its way back down to where it started from, back down here, and then probably over a little bit further, maybe a couple of weeks, maybe a couple of months, find our way down to close to, if not below or at 5,000. I think 5,000 is probably on the cards based on what we're seeing right now, to be honest with you. There's nothing much more to say about it than that. Obviously, there's a lot going on in the world that is a problem for economic stability. There's a lot of trade goes through that area that's in trouble at the moment. So let's just recognize it for what it is. If you were sensible and not looking to take risk, you wouldn't be trading this area. You wouldn't be going long. You wouldn't be going short. You'd be chilling out. Remember what last time something happened in that area? The market took a big dump as a result. It was a significant event. It resulted in nothing much, but just a load of noise. But still, it affected the market, and I would expect this to affect the market too. So let's just recognize what it is that we're seeing, what it is that's going on behind the scenes as well, and recognize that it doesn't suit a favorable bullish trading environment. That is just the truth of it. So we just have to recognize that for what it is. It's not a bullish trading environment currently for today. So because it's not bullish, we should probably not be too optimistic about how any of this is going to resolve. In the short term. Long term, the charts normally speak for themselves, and I still believe very strongly in the accumulation zone of the total 2, which is why I've accumulated within it, and I will continue to accumulate if we go below it. I'm very happy to do that. That is my expectations of the market moving forward over the next 12 months. That's a different setup. That's a completely different setup altogether. But right now, in the very short term time frames, recognize what it is that we see, recognize what it is that we can hear, and don't bite off more than you can chew, because that will probably end up being a bit just a struggle, if anything else. Right, so I'm going to leave with you there. I'm going to do a Patreon live stream for those who are members. Links in the description below if you want to pick up a membership. Other than that, I hope you have a nice day. Take it easy.